welcome to the weekend edition of the Daily Market Commentary. Typically, I like to get these out right as the market closes, but I'll be frank, it was Friday, it was getting to the weekend, and I'm running a little bit behind. So at least we're getting it on Sunday evening before the markets open up. That's really the idea, is just to take a look and see what transpired on our last trading day, and then also look for some opportunities in the next day. So what I do, if those of you that are new to the channel, we go over the same markets every day, and we look at these markets from really a technical perspective, and we look at the same markets, and we leave our lines on the whole time. And the reason we leave our lines on is because we want to see how our positions evolve over time. So let's go ahead and get rolling. The S&P 500 being the market that we're going to look at to start off. Now, in the S&P, we had talked about there's a potential on the breakout side if you wanted to take one of the breakouts. When we first broke out, there was this little breakout here that we decided late last week was not a good opportunity. But we said if there's another breakout again, you can possibly run this thing long, and that's really exactly what happened. There was a huge breakout. It was in the overnight hours, and then we pulled back, giving you an opportunity for a re-entry. So Friday, actually on the smaller time frame, and I try to stay to the bigger period time frames, but on the smaller time frame on Friday, we did get a pullback into this little region right here, and this little region right here was a nice little entry potential for a kind of an overnight entry if you were indeed willing to take it. Now, most of the traders that I talk to aren't really looking at those overnight levels as strong entry candidates, and so maybe you missed on the breakout opportunity, and that's okay. Now, I'm not looking to short this thing at all, certainly not with an all-time high. Are we overextended? Yes. Is it an all-time high? Yes. Is there a reason for me to short it? No. I'm not going to be trying to short against an all-time high. Matter of fact, there's a very good chance that the market's going to gap up again on Monday, and I don't want to try to fade the gap at an all-time high. I do, however, have now, since we have that breakout, an area that I can be engaged in. So this area here, which was resistance, it was resistance right back through here, could act as a new area of support. Let's kind of give ourselves a range here for entry, somewhere between 25.58, 25.61. Somewhere in there may be a good opportunity for an entry. Now, my problem with this, a couple of problems that I have with this, primarily one being that it's 6 o'clock at night, 7 o'clock at night, 8 o'clock at night. So what I'm going to do is I'm going to edit my properties on this line, and I'm going to put some dashed lines. Those of you that have seen the channel know that if it's a dashed line, we're not going to buy it as price touches here. We're going to wait for price to come in, and then we'll look to buy as price comes out. So that's really the level that I like in the S&P. There's a level a bit lower, which is actually a slightly higher probability area. And the reason I like that is because you see how that long wick came up and then price came back down. Well, that tells me that long wick by price coming all the way up there is that there was some selling pressure in here, and there was a fair amount of sellers that drove it back down. Now, price then rallied back up, and it had enough time that it spent there for those sellers to be eaten up by most of those buyers. So whereas this is a lower probability entry point, I think this one is significantly higher. So this is a better entry in my mind than the one above. And I like this area down here a bit better than the area up here. I'd be okay if somebody decided that they don't really want to take that area down there, as it's just it may not kind of fit their needs and what they want to do. So after the S&P, take a look at the NASDAQ. The NASDAQ, we have a level that's kind of similar to that breakout area. I still like this area down here. 60.16, 60.35 didn't quite get to that region yet. We do have another breakout area right in here as well that could be a potential, very much like we had in the S&P. This could become an area that could act as a bit of a floor when price comes back down into this area. So I'm going to leave that area there. I'm going to highlight it. But I am going to put a dashed line by it. Once again, this is kind of like the area that is in the S&P on the breakout, where I like it, don't love it, but as long as the reward to risk is there, it's going to be something worth taking. I mean, it's at 60.96 by 60.89, so you've got about 9 points worth of risk. So that's $180 a contract on the NQ. You know if you're willing to take a flyer on 2 or 3 contracts, that can add up pretty quickly if it's not in your wheelhouse. Now, crude oil. Crude oil, as we speak, is in our area where we believe there was a selling opportunity. So right now, we're sitting right in our selling opportunity in crude oil. Let's take a look at that on a smaller period. And what we'll see is that there was this area where price rallied up. We went sideways for a bit before then dropping off. Had a little stalling point here before a humongous drop off. And then as crude oil has opened up today, we ended the day really into that area. As we've opened up on Sunday, we've seen that crude oil has started to roll over. So I love looking at the markets on Sunday night just to see exactly where they open and what they do. Now, with this area being here, I have to tell you, I'm a little concerned with this area right down there, right around 5195-ish. And I might be willing to move my stop to break even if we get down to that level in the overnight hours. And the reason being is that there's definitely some unfilled inventory, if you will, of buying that wants to occur at that price level. And I don't know if I want to be involved too much with that. So I think that we still can move down. I'm not against the level at all, but I do always keep my eye on what is the opposing support area if I'm selling at a ceiling, or right, where's the opposing floor if I'm selling at a ceiling? Where's the opposing ceiling if I'm selling at a floor? And that's really buying at the floor, and that's what I'm looking for. Gold. Now let's look at gold real quick. Now, those of you that remembered our video from Thursday, we had talked about this gold level. If you notice, it's in purple, and the reason it's in purple is because we talked about that being a small time frame opportunity at best. And when we look at this, remember, our rule is always, like I just said, if you're going to buy somewhere at a floor, you want to have your target at the opposing ceiling. Well, our opposing ceiling was right in here, right? So this was a very, very, very small profit target, profit objective. There was not a lot of money left in this trade. You're not always going to have a whole bunch of money left in a trade. So my guess is most of us didn't take this, because if you saw this here, this should be enough to scare you off to stay away from taking this thing on this move away. If you did take it, that's a small loser. I will tell you, I myself did not take this gold trade. Wasn't enough profit objective for it in it for me. But as it goes to realize, we are in an area that could be a pretty good little level right now. So I like this area right here as a potential buying opportunity. Stop loss goes just below. First profit is first adjustment of my stop is going to be 12 right up here at 1281. I really am managing these things fairly tight because we've been running in some tight ranges, longer running trends, but some tight ranges, and it's reversing oftentimes at those opposing areas. So just keep that in mind. When we look at the bigger picture on gold, we can see that gold is coming to an area that's probably not going to hold for very long. So I don't anticipate this rally, any rally we get out of here, I think is going to be short-lived, because my bigger picture trend is still dropping. All right, let's take a look at bonds and our currencies. So looking here at our bonds and our currency markets. Bonds, we really didn't have anything new that we had added last week, and really still nothing new to add. We had this strong drop away right in here on Friday. This is not anything that I'm in love with. I don't love the fact that it's retesting this ceiling, this area that was here in the past, where we believe that there's a bunch of selling going on. I don't know if I want to really mess with where I think that there's an additional selling pile. If I go to a daily, I still think that there's room for it to fall down to this range. This area right here could be a stopping point, but we've got that has been a stopping point in the past, and I think that stopping point could be used up here shortly. So I would look a bit lower. So there's really not a whole lot there that I like in the 10-year note. Moving on to the Aussie. The Aussie still's not gotten near our level. Nothing's really been put in that I love. There is this little range right here. For those of you that are interested in some really small time frame moves, move it down to a 5-minute chart, and you should be able to see that we had this little bit of basing here before a pretty good move out. So for those of you that are really looking for short time frame monies, you might be able to get a little rally back up in here and then a drop away. On the euro, here was another example of very small intraday opportunity that price touched it and then boom, shot up out of it, and then it went down through it. So let me go to the small time frame chart, and that's what you'll see. Price touched it, and then, if we remember, this is our floor. Up here would be our ceiling. The beginning of that drop would be what I would look for in the ceiling, and that's exactly where price ran to. So if you were able to take advantage of that little move in the euro, great. You were able to catch it and then ride it for that little move right in here. Now, obviously, that is no longer going to be a valid trading opportunity going forward. So I'm going to remove this one here, but that one did work out for a nice little profit. Hit the area and continue to move. Let me go back to the hourly chart. I like to stick to hourly charts. Primarily, they're going to give me my better probabilities when I'm looking at these. And there's probably on a smaller time frame more opportunities right up in here to get short. So if I do go to that 15-minute, the gap fill area, certainly. You may even get, for those of you that are a bit more aggressive and you want to play it, you may get this little move right in that range there. As we had this little drop out of this level, and this was right past the open today, just playing it right at the open. And this is a little bit of a gap and go, if you will, right? We gapped down and we've continued to go. You might be able to get a little short right in here. So this could be a good Sunday night trade opportunity. I'm going to change the color here to purple because it's a small time frame entry. But could get a nice little entry on this one with a nice little small risk profile. And then Canadian, I got to tell you, I missed this one. Missed it. Didn't even consider the short off of this range. Didn't feel like it really had the teeth to hold that kind of a move down. And certainly it did. Strong move away in that area. But no more. It doesn't fit our criteria for an entry any longer, because we had a very strong move away from it already, which probably exhausted some of the selling that did exist up there in the past. If I go to more of a daily chart, I'm going to look. I still have this area down here where ultimately I believe that we've got the Canadian dollar going to. So anything that rallies back up to a good entry on the smaller time frame, I still like for a longer term trade. Going to our last four markets. Going to 12 markets has made this thing a bit longer. Going to our last couple of markets, I had tweeted out about this Nat Gas trade. For those of you that remembered, we had talked about this Nat Gas trade getting short on the touch right here and then taking some money off the table right at this line. This was the line where we drew the line as take some money off the table right here. And look at exactly what happened. Price hit here, came down. You better have gotten your money off the table, and then skadoosh as price just rallied straight up out of it, and then we've gapped up over the weekend. So this is a great example of if you've got a plan in place, and it's a little tiny line here that was just there to remind me that we're supposed to take money off the table. This is an example of having a plan in place and following the plan. The plan was take half off the table, move whatever you have left to break even, and that's exactly what we did. And if you did that, then you did okay. If you didn't do that, if you didn't follow the plan, then you lost money on this one. And a good plan vigorously executed today is better than a perfect plan executed next week. And so we've got to have a plan in place. So I'm going to remove that area here because this one is no longer valid. And so now my best, most valid area is going to be this area right in here. Is where I would look at for this Nat Gas area. Great British Pound. We still have our areas here. Nothing has changed in the Great British Pound from a week ago. Silver, we had this area down in here. We still have it. I'm still not in love with it. It was from a couple of weeks back. Nothing has been put in the last couple of days that's going to change my mind. And the same thing with copper. Nothing's really changed my mind in copper, although we did have a little move here, which price has already touched there and started to drop. So if you wanted to short copper, there is a potential breakout short from where we are right now. if we can continue to hold lower swing highs and lower lows for short-term tradable opportunities. So, there's a lot of things out there to trade, and the levels are still there. They are where they are because that's where we believe that the buyers and the sellers are going to be, and where our support areas are. That's where we want to be buying, and it's all about having a plan and following through on that plan. And your mindset is the most important thing in trading. Your mindset and how you handle yourself and how you handle losses is really the key to being successful in this business. So thank you so much, everybody. I hope you enjoyed it. And then I will see you back tomorrow. Same bat time, same bat channel. Until then, be safe. Talk to you later. Bye.